Welcome. Good evening, everybody. Ethan here from Investing Note. Okay, a lot of people joining us today. All right. Let's give everybody just one more minute, to join in. Okay. We have a special guest, Thomas Poh, who is the founder and the managing director of PZH Consultants. Thomas, you want to say hi?
Hi, everybody. Good evening.
Next minute. Okay. Today's topic is about trading micro equity futures, right? His hand. Okay, hi. Okay, so of course, formally, good evening, everybody. Ethan here from Investing Note, right? So today's topic for this webinar is trading micro equity futures. Of course, our special guest today is Mr. Thomas Poh, founder and managing director of PZH Consultants. Thomas, you can say hi. More people
Hi,
are here.
good evening, everybody again.
Okay, cool. So, of course, this is part of our Invest Academy series brought to you in partnership with Futu Mumu. All right, so I'm going to play this, very cute advertisement that you guys, spend 30 seconds looking at that.
Everyone around me is talking about investing. Do you invest too?
Mumu.
There's so much research to do, but so little time.
Mumu.
But how do I actually start?
Mumu.
Download Mumu! Investing made easier. Download Mumu now.
That's a shout out to our partner, Mumu, powered by Futu. All right. So I think without further ado, I'll let Thomas, share his screen and he can start. Thomas, time is yours.
Right, thank you, Ethan. Just give me a sec. Okay, share screen. All right. Okay, thank you, everybody. And again, a big welcome to everybody for signing in this evening. And a big thank you to Investing Notes and our sponsor, Futu Mumu. Okay, I'm Thomas Poh. I'm with the financial industry 20 over years. And today I'm going to share with everybody how to power up your trading with micro equities futures. So a little bit more about myself. Mentioned earlier, I'm in the financial market 20 over years, started in Citibank and moved on to the some of the big names in the financial banks market, like ING, HSBC, UOB. I also was the head of trading in Vietnam. So my expertise is emerging markets, FX, and rates in Asia. And after leaving the banking industry, I have started my own consultancy firm, focusing on products training and skill sets training, as well transformation consultancy, which is what we are doing here today. I'm going to share with everybody something about micro equities futures. All right. So before I begin, just a quick reminder to everybody that I'm not an employee of Futu or Mumu or Investing Note. I'm a private consultant. Whatever I say here is my personal view and for training and education purpose only. Okay, so let's just begin. Futures, right? I think everybody present here has some experience, dabble a little bit of stocks, ETF. But when it comes to futures, okay, that is where, some of us may get a bit rusty. Maybe some of us have learned it in school, right? In university, we attended a course in futures, but we may not really remember what it is. So this is where we're going to do a quick refresher, a very quick refresher. Okay. So basically for futures, all right, we start with a futures contract. And here CL actually means crude oil. Okay. I'm going to use crude oil futures as an example. All right. So in any futures contract, just like your stocks, your ETF, there will be a buyer and seller. And futures actually evolves from commodities hedging. So the farmers, they want to hedge their harvest. So they went to the market and look for somebody who willing to take the price risk in a wait for their harvest, to a few months down the road. So they lock in the price. Okay. So I said earlier, locking in the price. So it's an obligation. Okay. So futures itself is an obligation. Okay. So we talk about the obligation to do what? Okay. There is an underlying which the futures contract is referenced to. So in this particular case, we are talking about crude oil. So the underlying here is 1,000 barrels of crude oil that is to be delivered in the future. Okay. So there's a future date, which is what we call the maturity date of the futures contract. Okay. So a futures is an obligation between the buyer and the seller, which promises the delivery of an underlying asset. Okay. The reference an underlying asset in the future date and is traded through an exchange. Okay. It's traded through an exchange. So it's as simple as that. Okay. It's as simple as that. So the futures contract, okay, is an obligation referencing an underlying asset, in this case, crude oil. Okay. Promising that both parties will settle this contract in the future, hence the name, and is traded through the exchange. Okay. Like CME, Chicago Mercantile Exchange. So you may ask yourself, right, as investors or day traders out there, what are the advantages of trading futures? Why are we here today? Why are we sharing knowledge about this new product? As investors out there, you may talk, I'm an investor. Why I'm not a speculator? Why should I know about futures? Well, there is quite a few advantages with regards to the trading of futures. Okay. First and foremost, we said earlier, okay, futures are traded through exchanges. And as we know, as we learned through the 2008 Lehman crisis, okay, credit or default risk itself cannot be underestimated. So given the fact that your counterparty, if you trade any futures, all right, the fact that you trade through the exchange, your counterparty is the exchange itself. So in this particular case, let's say CME, okay, so you literally have no default risk. So that's number one. Okay, number two, liquidity. All right, so a lot of futures products actually is there's high liquidity because of the numbers of and types of players that actually go through and trade through the exchange. Now you have from speculators to hedgers to asset managers, retail investors, right? So with that, all coming to the central marketplace, the exchange, right? It basically ensure high liquidity, which is important, especially to retail investors. And with that, high transparency. And what do you mean by high transparency? Okay, because of the fact that the futures trade through an exchange. So pertinent information, key information like what? Like volume, daily trading ranges, and open interest. Open interest is basically the outstanding contract that is still not settled, right? Either the net long or the net short, because a combination is zero, right? Being a zero-sum game. So all these pertinent informations are available to help investors and traders analyze the market in terms of market positioning. Okay. The fourth one, leverage. Okay. Everybody say, oh, leverage, that's risky. Well, leverage, like a lot of things, financial markets, is a good servant, bad master. And in this particular case, leverage, the trading of futures, allows us leverage, and that is an advantage. Why? Because it allows you to put up initial and maintenance margins only without paying the full notional of the futures contract itself. All right. Fifth, longer trading hours. And what do we mean by longer trading hours? Well, if you trade stocks or ETFs, a lot of time you really have to wait for the exchange, depending on which exchange, let's say you buy QQQ, okay, ETF, you have to wait for the New York Stock Exchange to open before you can start trading, putting on position, liquidating on position, etc. While for futures, it's close to 24-hour trading cycle, all right? The trading hour is close to 24, all right, almost 24 hours, all right? And that, of course, is an advantage because why? All right, global markets continue to evolve, unforeseen events occur a lot of times when the main markets are not open. So the fact that there's longer trading hours allows you to both exploit any trading opportunities or manage the risk, okay? Which comes to my last point, because given all the above, okay, leverage, all right, longer trading hours and high transparency liquidity, it allows you to have a very powerful and useful tool in terms of risk management, okay? Think about it, right? I mean, if you have a decent portfolio, all right, if you need to hedge a position, okay, you can sell all your positions or you can go the opposite side in terms of futures through leverage by putting up just a much smaller amount as margin. Okay, so these are the 6 main advantages when it comes to trading futures. So now I shall refresh everybody to some of the futures concept and terminologies, right? Okay, first and foremost, we said futures. Futures itself is a derivative. Being a derivative, there is always what we call an underlying asset. Okay, the underlying asset can be agricultural, grains, orange juice, energy, right? Metals, precious metals, right? Equities, FX, interest rates. Okay, so it can be any one of these. The next concept we have to understand is that future contract sizes or tick sizes, right? Contract and tick sizes. For example, right? We have this ES, the code is ES, and that is the S&P 500 E-mini futures contract. And the note, the size here is $50, $50 US times the S&P index. That translates to $50 US per point. So that's the size of the contract. Okay, it's pretty large, pretty large. Or you can have a smaller contract, like the micro E-mini S&P 500. We should talk a lot more later. Okay, in this particular example, right, this MES, micro E-mini S&P 500, is $5 times the S&P index. So 1/10 of the bigger contract, which also result into $5 US per point. Okay, and why do I bring this up? Because this is customized. It was actually designed for the retail traders. And I will share with everybody more later. All right, so the third thing, and we said earlier that futures, as the name implies, is a contract that we settle in the future. Okay, and this future date is what we call maturity date. Okay, by and large, futures can have monthly settlements. So you can have a January, February, March, April contract, you know, as what you can see in the like oil market. Or you can have quarterly, right? March, June, September, December, like you have in the equity in this index futures. Okay, so maturity date. So you have to know that, okay, what is the underlying contract, underlying asset? What's the contract size? What's the maturity date? Okay. Next is we have to understand the code, because as you see in all the trading platform, they have a certain code and there is a certain way to interpret it. Okay, and this is how we do it. I'm going to show everybody here E-mini S&P 500 index. Okay, so it's ESU1. So the first part ES is actually the product code. So it means S&P 500 E-mini. Fine. So what does U mean? U is the contract month, and being a quarterly contract, okay, there's specific abbreviations for that. For March is H, June is M, U is September, and Z is December. So what about the last numeral, 1 here? 1 actually means the contract maturity here. So in this particular case, 2021. Okay, So if you're going to look at MESZ1, that actually means a micro E-mini because MES is the product code. Okay, so Z is December and 2021. Okay, so it's as simple as that. Okay, so we mentioned about contract maturity and we talk about 2021. So the question here, somebody may ask, what happens when a futures contract actually reaches maturity? What happens there? Okay, well, there's two ways that we can settle any futures contract. The first form is what we call a physical settlement. As the name implies, physical settlement, the seller will have the right to choose whether they want to settle physically. So they will deliver the physical underlying asset. So if it's a crude oil, they will actually deliver 1,000 barrels of crude oil, for example. Okay, so that's what we mean physical settlement. Okay, the other form is what we call cash settlement. Okay, by cash settlements, that means that the buyers and seller, there won't be physical asset exchange, but rather they will net settle their position based on the final settlement price, okay, of the exchange, the final settlement price of the exchange. So that is how a cash settlement process is like. Okay, so this is the two ways where a futures contract can settle. But if you choose not to, okay, because once the contracts come to maturity, right, you will lose the position in that way. You know, you either have the physical, you will lose the futures position. If you have the physical delivery, you will literally have 1,000 barrels of oil, which you need to take settlement, or you can net settle and you can have the cash settlement of your profit and loss. But if you choose not to do so, you can do what we call a rollover trade. Okay, you can literally roll over your contract. So for example, you have an existing long MES futures, a micro, okay, futures here. Okay, so if you roll this contract, what do? You sell the existing contract. Okay, so let's say if you are long, you sell the existing contract and then you buy, right? So you sell the September contract and you buy the December contract. This is a plain and simple what we call a rollover contract. Okay, so bear in mind, you can actually do so just to keep your futures position. The next thing I want to share with everybody here is what we call price convergence at maturity. Well, the thing here is because the futures contract actually reference the underlying asset. So the futures price should move in relation. I use the word in relation to the spot price. Spot price means the cash product, the underlying product itself. Okay. Not necessarily they will be identical, but it should move in tandem. Okay. It could be higher than the spot price or lower than the spot price, the futures price, right? But whatever it is, the futures price will always converge with the prevailing spot price at maturity. Okay. Otherwise, there is this arbitrage opportunity because plainly the futures price comes to maturity, right? If the price there's a differential, the arbitrageurs will come into the market, right, and take opposite side of the positions and arbitrage this price differential. Okay, so there's a very, very quick run through, a refresher for everybody in terms of what this future mechanics is, you know, what is a future and how does it really work. So for us today, right, I would like to share with everybody something that is really designed for retail investors, all right? This suite of CME Micro Futures, right? That covers equities indices, energy, precious metals, right, forex, interest rate, even crypto. Okay, but today we're just going to focus on equities indices. Okay, we're going to focus on equity indices. All right. So what are the some of the micro, right? The micro equities index futures that's available by CME. Right. First and foremost is I shared with everybody quite a few times in the last 15 minutes. The S&P 500 micro E-mini. Okay, so the contract size, remember you have to know what the contract size is $5 times the index. That translates to a per tick of 125, right? And it's financially settled. Okay. Or if you like to trade NASDAQ, okay, you can trade the micro E-mini. Okay. Micro E-mini NASDAQ 100. We reference the NASDAQ 100 index. Okay. The size here is $2 times index, and the price per tick is 0.5. All right. Price 0.5. Or if you are into small caps, right? Small cap stocks, you can look at the Russell 2000, the micro E-mini Russell 2000 futures, right? Micro E-mini futures. Okay, so basically is the 2000 small cap stocks in the Russell 3000 market index, right? And the size is $5 times the index, translating to 50 cents US per tick. And last but not least, for those that's more familiar with Dow Jones, right? There's also the Dow Jones Industrial Average Micro E-mini Index. Okay, and that is 50 cents times the index. All right, and I'd like to highlight to everybody here that all four types of micro equities index futures are all financially settled. Okay, so the contract will mature and there will be a cash settlement based on the final settlement price. Okay, so for everybody out there, if you wish to understand more, okay, you can go to the link below here to understand the specific details of each particular contract. Okay, all right. So everybody may ask, so what are some of the trading strategies that we can have with regards to this micro equity index futures, right? How can we actually utilize to help us improve our trading performance? Okay, well, first is of course directional. All right, directional. If you think that the S&P 500 index, for example, is going up, okay, you can always go long the micro E-mini S&P 500 index futures. Okay, and if you think it's coming off, and this is in a way, although it sounds simple, okay, one of the advantage of trading futures, you can go short easily. Okay, you can short the S&P 500 index by shorting the futures itself. Okay, if you're trading ETF, going long is quite easy, but if you want to short the ETF, you may it's not so easy for everybody. Not so for futures, because it's as easy to go long as it is to go short. All right. Okay. The other one is what we call beta replication, right? So beta itself is basically the relative return of the index versus the benchmark. So if you want to replicate the benchmark, the easiest way is to just long the benchmark. And what other better way than just choose the futures? Okay. Then you will have a beta of 1. Okay. And you can increase the beta or reduce the beta by just adding to your portfolio. Okay, you do not need to provide the full capital because of the leverage factor we said earlier. So that's beta. The other way, the other strategy is what we call create the alpha. And alpha is the excess return of your portfolio versus the benchmark index. Okay, this is the excess return. Okay, and alpha can be generated because you can trade the futures contract in and out. All right. So by active trading, okay, successful active trading, okay, you can actually add alpha return to the beta return of your portfolio. Okay. The next way is portfolio hedging, and that is really one of the very powerful users of futures as one of your trading strategy. Imagine the investors, you have a portfolio, a diverse portfolio with many stocks, let's say 20 counters, right? And some things happen and you choose, you need to do something, right? So you can actually short the index to hedge, just like what happened during the COVID pandemic, right? Okay, while you go around trying to square every single position in the portfolio, that might be difficult. Plus the fact that maybe some of the exchanges that your counter is listed is not open yet. Well, I said earlier, it's close to 24 hours. So this portfolio hedging gives you a lot of leeway, a lot of latitude in terms of what you can do. Okay, you don't have to sell the entire portfolio. By putting up a partial amount as margins, you can short to do your risk hedging, right? So this allows you to have lower transaction costs and you can reverse the hedge a lot easier. You don't have to buy back 20 stocks again, all right? The next strategy is what we call relative value, right? So you believe, for example, that the S&P index is going to outperform the NASDAQ, for example. Okay, let's simply do that, right? Okay, you long the S&P and you short the NASDAQ futures. Okay, again, this is where the ability to short allows you a lot more latitude, all right? A lot more flexibility in how you design your trading strategy, okay? Right? And plus the fact that it will have offsetting margin effects in terms of your margins required in terms of your futures trading, okay? The last way is what we call sector rotation, right? Not just on the relative value, it can be very specific, right? For example, here in this particular case, you want to, rotate away from small cap, okay? So you can go short, right? You can sell off your Russell 2000 micro equity futures position. And then if let's say you want to bring in, you want to add the tech stocks, all right? The tech index inside, you go long the micro E-mini NASDAQ 100 index futures, okay? So trading strategies wise, okay, right, it can be directional, relative value, hedging, alpha, beta, sector rotation. So there is really quite a few ways you can utilize the futures in your trading strategy going forward. Okay, talking about strategy, I think we cannot avoid talking about the market, right? So I will take this opportunity now that everybody understand a little bit more about the mechanics of futures, the advantages, okay, and then how each future work, okay, what is the notional size, the tick size, and then how are we going to, what are the types of trading strategy available. Let's look at the market. What is the market focusing on? And this is, I'm right to stress again, my personal view, okay? My personal view. Of course, if you turn on the TV right now, look at any webcast, right? The first thing that all the newscasters talk about is inflation, okay? Is inflation transitory? Okay, so these are questions that is puzzling everybody, and everybody's watching it, including, right, the Fed chairman himself. Okay, so the US inflation seems to be a lot more sticky than initially feared. Okay, you broke the 5% CPI level. It seems to be staying there. Okay. So with that, now a lot of questions is talking about this big thing, what we call tapering, right? As you recall, 18 months back, I think to the day, 18 months back, the world is on its knees facing a financial crisis that will bring down the global economies, right, to the abyss. And it is the combined effort of all the central banks globally, right, together with the governments with physical measure. So what the central banks did was they went on a asset purchase binge, right? This is the combined balance sheet of the G4 central banks. So the question here is tapering, right? So everybody is asking, when will the Fed start tapering? Okay, so the Fed chairman, Powell himself, mentioned in Jackson Hole, is like, okay, hinted it could be the end of this year, all right? But the thing here is, the market should not, or rather you, in my opinion, should not mix up tapering with Fed hikes, okay? It's one thing reducing the balance sheet of the Federal Reserve, another thing hiking the rates, because, and this is a flashback, just as a gentle reminder to everybody, okay? A flashback as a gentle reminder to everybody, okay? Back in 27th August 2020, right, the Fed has announced a new framework, okay, all right, which is average inflation targeting. Okay, the key here is average. And they will not have preemptive rate hikes just on low unemployment figures alone. Okay, so these are the key things. So with the inflation numbers, everybody is now getting very hyped up that it's going to be tapering and then maybe even Fed hikes. Okay, but one key event, or rather one key economic number was announced earlier this month, which is the non-farm payroll, which is the US non-farm payrolls, the employment numbers. Okay, just a quick recap. Post-COVID, immediately after post-COVID, there was a 20 million job loss in the US. And after that, there was robust recovery. Okay, I need to zoom into this chart here because of what happened here. This sort of skew the whole axis, and it's hard for us to see what happens next. So I'm going to just zoom into the recovery part. Okay, so what happened here is there was a big surprise in the August numbers. 235 versus close to 235,000 jobs created versus to estimate, economists average estimate is about close to about 1 million. Okay, so the question here is the recovery story? And bear in mind that will be something they'll be on the back of the mind when the Fed meets in September. Because prior to that, a lot of economists, a lot of analysts, commentators were saying, okay, come September, they will start announcing a schedule of tapering. So maybe this number will sort of give them some room, something to pause and think about. Okay, so in my personal view is that I think the Fed will err on the side of caution. Okay, they'll err on the side of caution because think about it, right? It was not too long ago that the world was really very worried about deflation. That was only 2 years ago, right? Deflation. Everybody's talking about deflation. Interest rate can never go up. There was this stress on this worry that you can never get the price back above 2%. Okay, so now we are the pendulum has swung way to the other side. Okay, so that's food for thought for yourself. Okay, but I think to me there's one clear trend that has been ongoing and will still be continuing in the foreseeable future, and that is the K-shaped recovery. Okay, what does K-shaped recovery mean? Because due to the onset of the pandemic, okay, the recovery process, if you analyze through the various sectors of the economy, is not uniform. All right. For example, the hospitality is very depressed. Banking also lagging a little bit behind, right? Of course, you have the discretionary consumer sector, your Alibabas, your Amazon, okay, your tech sector that is actually benefiting. So this is what K-shaped recovery actually means. And then why is it called K? Because it looks like that, right? Some industry actually head downwards, right? Because you had the L shape, you have the W shape. This is the new terminology called K-shape. But in my opinion, it's no longer a recovery. Why do I say that? Because it's more like a K-shape transition. The word recovery actually does not give it enough emphasis on how global economies has transformed. Look at it this way. Work from home is never going to go away. Even with the pandemic under control. Why? Because the benefits of virtual meetings, work from home is there. Cost saving, we potentially have certain amount of efficiency, etc. They are there. Deliveries. And because of the fact, due to the pandemic, right, corporates undergone 3 to 5 years of IT transformation within 3 to 5 months. Okay. And that there's no turning back to that. Once you have made the transformation, you will start to reap the benefit of those transformation. Hence, it's a transition, and that will be ongoing. And why do I say that? Because you look at this K-shape, it's hard for us to trade this team unless you utilize what I've shared with you earlier. Okay, each of these index potentially can help you create this K-shaped transition story, right? If you believe in this trend continuing, you can long the NASDAQ, okay? You can short the S&P or short the Russell, run it against as a relative trade, okay? Or if you don't believe my call, I mean, everybody is entitled to the opinion, you can go the other way, right? If you believe that a K-shaped transition is going to pause or even reverse, then by all means, short the NASDAQ 100 micro E-futures, and then long the S&P 500, okay? So this allows you a good latitude for you to express a view. And to me, this is one of the clearest trend post-pandemic, okay? So to sum it up, the market more focus is on inflation, on Fed, on Delta variant. Now we have the mu variant. And of course, I didn't touch a lot earlier, right? The tension between the US and China. Okay, I think that one is worth a discussion all on its own, but do pay attention to that because that will potentially affect the US equity indices for sure. Okay. The final part, and I think Ethan has promised everybody, is a little bit of a dessert for everybody. Okay, is some useful CME analytical tools. Okay, and this is some tools that I really urge everybody, if you have the time, log on to the internet, go to the web link that I'm going to share with you, because first of all, it's free. Okay, some of these analytical tools, you can only find them in professional application like Bloomberg, but for the purposes of futures product, CME provide the analysis of the futures for free. Okay, so what are some of them? Okay, first of all is the CME Fed Watch. Okay, the link is provided here, or you can Google CME Fed Watch. Okay, you will come to this screen. So what does this Fed Watch actually do? Okay, as the name, right, you help you watch the Fed, analyze the Fed. So how do you analyze the Fed? Do you actually take the economy's polling and everybody's estimate? No, it does not. Being a futures exchange, CME extract the futures price data. Okay, price data of what futures? Fed funds. Okay, Fed funds is basically the Federal Reserve funds. All right. Okay, the Fed funds that's traded. So there is a futures market on that. So from the prices of the futures market, okay, you can backward calculate what the market thinks the probability of Fed hikes, Fed cuts over the various meetings in the futures. All right. Okay, for example, this is the March 22nd meeting, March 2022 meeting. You can see what the market's probability. Again, this is not economy survey, it's not polling. This is using market prices, which to me is the most accurate because it's not an opinion. There are people, this is the market putting where the mouth is, right? Okay. And it allows you to go all the way up to 2023 meeting, February 23 meeting. Okay. And as you can see here, okay, there is the price in the market. Again, I'm going to emphasize here, the market priced in a 50% chance of a 25 basis point hike. Okay, so if you ever read on the news, hear on the news, when people say, oh, the market has priced in 50 basis, fully priced in a 50 basis point hike, 25 basis point hike, you may wonder where does all this information come from? How would they know? This is where you pull out the same information. Okay, so from here, you can see what the market, as we say in a trader, what the market has already priced in. And once you know what the market has already priced in, then you can understand if from the actual Fed decision, then you can deduce whether that is a surprise or that is a non-event. And as any good trader know, we only react to surprises. We do not react in the same direction, non-events. In fact, what we do, buy on rumor, sell on fact, we may want to go the other way around because once information are digested in on a non-event, market tend to reverse. So this is the very useful tool for you to help you understand that. Okay. The next one is the CME Treasury Watch tool. Okay. And how do we use this? Okay. We say that we have to watch tapering, right? Watch what the Fed balance sheet is. Okay, so we have to watch what are the US Treasuries issuance calendar. Okay, this is a one-stop portal. Okay, the website is here given. You can Google CME Treasury Watch. Okay, or you can go to this website. Okay, here you have data from the Fed Watch tool we said earlier. Okay, you can even see the volatility of the US Treasury interest rates. Okay, the Fed balance sheet we said earlier. You see, you want to understand tapering, right? This is how you look at it. Okay, issuance calendar, etc. Okay, so this is what you can get from the CME Treasury Watch tool. Okay, last but not least, if you guys would like to know more about CME products and information, you can download the app. Okay, so the CME Group app, you can go to your app store, you can Google, you can look for CME Group. Okay, and the Fed Watch tool, Treasury Watch tool is all available inside, including all the product specs of all the futures contracts, the trading, opening, the closing, the settlement prices, they are all there. Okay, including market commentary written by CME economists themselves. And also there's also the fresh from trading room market commentaries sponsored by CME, published there. Okay, so I'm at the end of my sharing session with everybody. I hope that you will find what I share with you useful. If you have any more information, do feel free to link up with me. This is my LinkedIn address, my office email. Okay, and this is my QR code to my website. Do feel free to drop your comments there on my comment wall. And thank you, everybody. I shall pass the mic back to Ethan. Thank you very much, everybody.
All right. Thank you, Thomas. Those are three very wonderful tools that you just shared as well. I've been looking at it. Right. Thank you, Thomas. So shout out to Thomas, who has more than 20 years experience in this field. All right. So right now we pass our time to the business development manager, Josh, right? So Josh, the time is yours to share some, interesting features of the Moo app.
Sure thing. So hi, Ethan, nice to meet you again, and thanks Thomas for sharing about the futures. Of course, because as you know, futures at Futu, right, we have different instruments. We have equity shares, we have ETFs, we have rates, we have derivatives like options, and of course futures. Futures is always something. Always a hot topic in the markets because it's a standard contract, is fixed. Then we do have exchange to trade, and of course, because CME is exchange, then they can provide all the information here. But what we can do on Moomoo. So this is today's topic here. Okay, so this is the interface of a Moomoo, and for those who are interested in futures contracts, you can always find all these tools and information here. So for Futu here, what we want to do is we want to provide all the information, all the data, all these investors need, and to make investment decisions. And of course, for futures, we do have this type is futures. Then you can always add the futures contract you are interested. So as mentioned by Thomas, I think one of the popular futures is a WTI contract. So that is the crude oil. Now you can see the main contract now is October. So, but on top of this, you can always see with different time frame, we have a November, might be all the way until 2023. So all these contracts are available here. But as I mentioned that October, that is the main contract now. So if you go to certain contracts, maybe you see October 2023, you may not able to see the trading volume. It's just the price there because it's too far away. And most of the people will trade the main contract. Now it's about October. So here you can see the main contract October, WTI crude oil. This is the main contract. So the price now is about 69.3. These are the basic information about the price high, what's the open price, what is trading volume, and what is the previous settlements price. Then at Futu here, we always provide you the real-time pricing. So now you can see the east time is about 8:46. You check the time now, it's the same. So it's real time. Then you can see intraday, the price, the change increase from about 68.5 all the way until this price, the current price. One interesting part is you can see the price or even the volume spike during this time. This reason is because during Asian trading hours, the trading volume is not so active, it's not so high. But now once the UK and US market open, right, you can see the volume and also the price spike. So this is all about intraday. Then of course, you can always see the 5 days, the trend, different time frame, 5 days, or even you can see the 1 day, the charts might be start from sometime in August, it dropped from 72 back to 61, now rebound. Maybe you want to set different time frame, week, month, quarter, or year. You can always see all these data here. Yeah, so, and of course, because we are talking about charts, you can always apply different indicators. I assume you are technical analysis. You do technical analysis, you can always apply the volume or it might be SQGZ, all these different indicators, and you can do the comparison as well. Then the other thing we want to mention here is about the bid and ask. Same as the shares, you trade shares, same as you trade rates or ETFs. You can always see the bid and ask, the price change, and based on this, we retrieve the data from CME, that is the exchange. And based on the volume queue in the markets, we can tell now about 68.92. We have about 600 contract pending here. Yeah, then of course, this is buy side, the higher is sell side. So you can see what is the market sentiment now. Some other interesting parts is about the futures. So now this is the October, the main contract, but how about the future? I mean, the future futures. So you can always say the November, December, January, but apparently now you can see the price is cheaper. So you can see it actually is called the backwardation. So which means the future price is cheaper. They do have a discount. So maybe for certain reasons, the economies or maybe some market traders, they find in the future in November or maybe in December, the price may drop. So that's why they give you a discount now. But of course, you can see the trend here. Maybe for WTI is downtrend, but maybe for other commodities, for even maybe agricultural contracts, the price is uptrend. So it's called contango. Of course, these are the contract information here. So for this crude oil future contract, interesting parts, 69, that is 1 barrel. And for one standard contract, the contract size is about 100 barrels. So in that case, right, if you buy one contract, the value is 69 times 100, which is about 6,900. This is the contract value. Then, okay, I mean, the standard contract is 1,000 because it's a micro. In that case, the size is smaller, it's 100. But standard contract WTI, standard size, 1,000 barrel. And as always, you can see others' comments about the futures. And also you can always see the news. And of course, we do provide some analysis. So maybe for us is we go back to the main contract. We go to the crude oil main contracts. So this is a standard contract. Of course, you can see more discussion here under the comments. Of course, you're most welcome to join the discussion with our other investors. And for the analysis, we provide some indicators. I say volatility. You can see that in different time frame, the price change. And of course, if you are not so sure about the definition, you can always refer to this icon. Then you can see the definition of each V, and maybe we give you an introduction about a quick introduction about how to use the charts, the meaning of these figures. This is a very interesting part. It's called correlation analysis. So because WTI is energy, then maybe we have WTI, we do have a Brent, we do have heat oil. These are the same commodity, but of course you can always compare with other commodities. I see the natural gas. Then you want to know what is the correlation among all these instruments or among all these futures. So you can see, even though maybe you see the heat oil, the Brent, maybe they say, it's in UK, or maybe the so-called methodology are a bit different, but you can see the correlation is still very high. It's about 0.97. To crude oil is 0.997, but to gas is about 0.0228. So they are not so correlated. In that case, right, when you adjust the time frame, you can see the trend. So you see the WTI and the Brent is almost 1. So it's which means if the price going up by one bucks, yeah, apparently Brent will increase by 0.97 as well. So these are some position analysis. I think apparently for the CME, you can find the same here. But what we do is that we present to all the retail investors or maybe for all these traders. Then you can see the money managers, producers, what is the volume here. Then of course, the total position analysis. So which means the open interest in the markets now. So as of August, we have about 2.1 million open interest, which means open contract held by investors, traders, or by all these in the markets. Yeah, so these some indicators for you to do analysis. Well, I mean, as I mentioned, that these are just the data we provide to you. It's not investment advice. All right. So of course, if you want to see more, right? Let's say you want to know, maybe it's all about oil. How about others? What is the selling point of futures? I think the one thing is about you can trade in different instruments or different index or maybe different factors. So anything happening in the markets, right? You can always find something related to futures. You're talking about equity shares. So S&P historical high. If something economy data, yeah, you can trade in equity index. And Forex, maybe for UK or something happened in France, something happened in US, something happened in Japan. You can find the Forex futures. We do have metals, so maybe you see inflation, interest, then you can find gold and silver. Energy, yeah, is oil, might be the gas as well. Interest, or even agriculture, you can trade soybean, you can trade corn, and all these things you can trade using future contract. The good thing is because it's a standard contract, so it's settled by CME, so you don't have much counterparty risk here. But at Futu here, we always provide you all these different exchange. You can see the data. But apparently for Hong Kong and Japan, it's not tradable for now. Is we present the data for you. But I think my middle office is working very hard to bring all this, to open all the access to all the retail investors. Yeah, so I think that is about futures. The other thing is about, in order to trade futures, right? I mean, for now, we do have a futures account. So maybe you say if you want to start trading with us, then you can just do a conversion or maybe do a currency exchange. It's pretty simple. So for example, I do have some SGD in my account, and I can just use these currency exchange functions to convert my SGD to USD. But just remember, you need to send to futures contract. So it seems a bit hand here, so maybe I just skip these parts. But one thing for sure is that we do have a futures account. You just need to do a quick, it's like this. So you can just do a transfer from your cash account to futures account and use the funds to trade cash. To trade futures. And the other thing, I think one more thing is about if you trade futures, right? One important thing is about the margin. So once you open the trade tickets, you can always say for now, this is Dow Jones. So now because the index is super high, now it's about 35,000, which means 35,000 USD. Then if you trade this, in order to open one contract, the initial margin is about 12,978 USD. So you need to ensure that your future account has sufficient margin in order to open the position. And the other thing is we don't have market order because exchange do not accept market order. You can only do a limit order here, but you can adjust the price to market price. All right, so yeah, so same because it's Dow Jones, so you can always see the chart. I mean, maybe for those traders, they're more into these indicators or more into the technical analysis. Sometimes you can refer to our PC version. Apparently, it's more. You can apply more indicators on the PC end. All right, so okay, I think few more things. Yeah, so I think apparently I'll cover the futures, how to trade futures, Moomoo app. Yeah, the next always the promotions. So now, yeah, now you see Apple share is back. So it's pretty simple. For account open, if you just open accounts, we give you 180 days free commission trading. So this will cover US, Singapore, China, A-share. US, Singapore, China, A-share. That is a free real-time pricing. So you can always see the price change. Then, of course, if you just do a deposit and start trading with us, you get one Apple share, and always you can refer a friend to Futu. If your referee just open this account and do the trades, yeah, you can add one more Apple share, and this Apple share promotion is only for 15,000, which means Apple is very expensive now, so we only have 15,000 to give out. Yeah, but so take the chance. And of course, you can always find us on all these social media. YouTube, we do have a YouTube channel to guide you further on how to trade, how to place order, and show you the different functions. And yeah, just follow us on Twitter, Instagram, or even Facebook. You can find us everywhere. I think now the Facebook, we do have the new poster, the Shang-Chi. Yeah, it's a trend. So, you know, the market Shang, which means going up, right? Yeah, so I know you get the points. Yeah, and always customer service or customer always come first. Give us a call, drop us an email. We do have a 24 hours team here. Actually, my sales trader is just over there. And write to us if anything, give us a call. We do have a local customer service support. And if maybe during the weekend or maybe something is on the app, you can use this function, customer service. Then we do have a team here to support you 24 times 7 or 5/7. Yes. All right, Eden, that's all. Back to you.
All right. Thank you, Josh, for the wonderful sharing of the Moomoo platform. Wow, yeah. Moomoo can actually trade futures too, apart from options and equities.
Yes,
right?
That's
and
right.
Also, yeah, thank you. And also, special thanks to Thomas for the wonderful comprehensive presentation on micro futures. I really enjoyed the talk. And for the audiences who actually are interested in the downloading of the Moomoo app, there's actually the link in the chat and you can just click the link and you can just sign up from there, right? So once again, thank you for the valued partnership with Mumu from Futu, and also special guest Thomas for the
Thank
wonderful
you.
presentation. All right,
Thank
so
you.
unfortunately, we don't have time for the Q&A, but you can always drop Thomas a LinkedIn connection, and drop in some questions there. I'm sure he'll take it up, right?
Yep, sure.
All right, awesome. So the time is up. Thank you everybody for tuning in. We'll see you in the next webinar. Thanks everybody.
Right. Thank you.